Welcome back to the channel, everyone. Thank you for tuning in to another great video. Look, if you are someone out there for the first time watching today's video, I want to share this with you. I have found a way effectively to be profitable and to be consistent using what I like to call the world's best or easiest trading strategy out there, okay? Just follow the steps. I have been talking and discussing and making videos about the strategy time and time again all over the channel. We have people that have, when I say people, I mean traders that are part of our Discord community, who are part and members of this channel or subscribers as well, who spent time watching the videos and have educated themselves on how to trade a strategy and are making money and are consistent. All right, if you don't believe me, join our Discord and ask. That's all you got to do, okay? It's simple too because it's free. All you gotta do is find the link to the Discord down in the description portion of the video. Invite yourself in and ask. The strategy works. All you need to do is study it, back test it, and maybe put a little twist on your own, okay? So here we go. We're gonna talk about the world's easiest trading strategy, okay? All right? That you can use to become a profitable trader in your own personal life, all right? Whether you want to do it full-time, want to do it part-time, want to trade the micros, want to trade the E-minis, whatever it is. Maybe you want to trade commodities or currencies. Because I trade supply and demand, and the supply and demand is universal regardless of the market. I don't care if you trade Forex, options, futures, whatever it is, supply and demand, you have to understand that term and that concept. If you do not, and you have not done your homework yet to understand what that means, look it up. But I will say supply and demand is just demand, aggressive buying, supply, aggressive selling. It's very easy stuff. You just have to understand the concept. But I will say this, the ingredient to the full-on recipe is market structure. I'm going to tell you right now, before you get started, make sure you grasp, regardless of the market you want to trade, market structure. That's going to be your golden key to allow you to understand and be able to read the market. All right, people talk about price action. Yes, that, okay, is different than market structure. The two combined together will give you a powerful platform or powerful means of trading, okay? So I want to go ahead and jump into it. I want to talk about the strategy right now. Without further ado, I'm going to show you a setup that and how it works, okay? All right, so let's go ahead and jump into it. So first and foremost, what you got to do is you got to take a look to see what the structure of the market, what is it doing? Allow the market to tell you. The market is a visual representation. Understand that. It's like reading a book. We read the words on the fine pages, okay, within a book to determine or to understand and grasp what is being presented to us, the story, the message, okay? Same thing here on the charts. When we look at these charts, we've got to be able to read what's going on. And it's all visual. This is from a visual conception of and based on perspective of what you think the market is doing. Because the trading is all about probability. Now, to me, when I look at this right now, what's going on, do yourself a favor, kind of disregard the boxes you see here, like where it says reference area. All right, I was marking off some areas and discussing it in the video. But let's get back. Just pay attention to the candles, okay? Pay attention to what you see going on, the activity. Push down, low. Lower high, push down, low. Lower high, push down, low. Lower high, push down, low. What are we doing? We're in a channel to the downside right here. So let me just show you. This is off my higher base chart. I trade range-based charts. Before you ask, guys, what charts are equivalent to what, I do not know what charts are equivalent when it comes to range and time or tick or volume. If you ask me why I trade range, I'm going to tell you time and time again. It's just simply because the fact is I see more setups that occur on the range-based charts. And the fact is that it's just cleaner to the eye to me. So let me go ahead, using this trend channel right here. I don't trade with, trend lines. I'm just showing you this channel so you can understand. If you have a hard time being able to see the market flow, you can pull up a trend channel to see which way overall on a higher base chart what the market's doing. So now we got movement to the downside. And you should know that the market can change its position and reverse when it comes to a trend at any given point. The tide can change. So you have to be prepared for that. So what I want to show you just in the session, not even the session yet, because we haven't even opened up yet. The U.S., the New York session hasn't opened up yet. But into the overnight session, there was a setup that unfolded to be able to go long, okay, at an area of demand. So when we see this low right here, this lower high, and then this last break, okay, the market turns around. What do you see happening now, okay, as it's moving back to the upside here? Pushing up, pulling back, pushing up, pulling back, breaking through areas of structure. It takes out this high right here within this swing. Now, it's a possibility it could be aiming for higher areas. We don't know yet. Could be wanting to come up here and fill some of these imbalance back up here to the top here, all right, and test this high. We don't know that for sure yet, but it looks like it's aiming there, right, because it took out the swing within this bigger swing as it was breaking structure back to the upside. And it pulls back right here. You see this last push to the upside where it made this high right here? It pulls back. So this is a demand zone right here. I'm going to show you because you have to understand what's taking place here. I'm going to draw it. It pushes up. We've got aggressive buying to the upside right here. The way I draw my demand zones, okay, when we have a swing is the last down bearish candle to the downside, the top of it, down to the bottom of it. And because we have this bullish candle right here that pushed a little bit lower, wicked out below the bottom end of that bearish candle, I include the bottom end of that bullish candle as well, all the way to the top of the bearish candle. All right, so it pulls back. Now, this is a high probability zone, and the reason I call it high probability is because we have an imbalance or gap resting back at our zone. Understand? Okay, that's what makes it trade high probability or the zone. Lots of times, what can happen is this right here: is the market can push up, all right, take a bit of structure right here, and then pull right back to the zone immediately, okay, and fill in the imbalance or gap back to the zone. All right. In that case here, if the market did that and then pulled back and it pushed up and pulled back, then it would make that zone invalid for me in a sense. I shouldn't say invalid, but it would make it a low probability zone. Invalid is basically when it breaks right through. It closes it with a candle and breaks below it. Now, one thing you have to be mindful of, and I tell people all the time when they're trading, is that if the market pulls back and pulls deeper into a zone, once you got a zone marked, aggressive buying, pull back to the zone, high probability zone, and and moves deeper into it, be very mindful because they maybe want to take this level, this level or this area of structure right here out back to the downside and continue moving lower. But if you pay close attention to what they did here, they moved deep into it. They wicked out by 1 or 2 ticks, okay? Liquidity. They grabbed liquidity here, and then they moved the market back higher. So sometimes I would not take a trade setup like this because the fact is that it did move deep into the zone. It did basically wick through it and then turn back around and push up. They're grabbing liquidity out. They know people probably have went long possibly in this area right here, and they're trying to hit stops, okay? That's all they're trying to do is stop people out. But if you got into this trade right here, I'm going to show you, for example, right here, what I do then is scale down to my entry chart. So I'm on my higher time frame 60 range chart, but what I do is I mark a zone off of this chart here, and then I move down, scale down, and move down to my entry chart, which is my 12 range. I'm going to show you. All right, so the market comes down. It taps into the zone. Now, what you saw there on the on the higher time frame, you see what's going on here, is once we got into the zone, again, it went right below that area. This is the zone off of the higher time frame that I just showed you on the 60 range chart that we marked up. I just carried it over to my entry chart. This is that area on the pullback right here, that last final high push, and then it pulls back to the 60 range demand zone. What I do on my lower time frame, once we tap into a high probability zone, okay, is I want to see a break of structure back to the upside, okay, a demand setup, and then a break and close of a candle going to the upside to go long. All right, so when the market came down, it wicked, like I showed you on the higher time frame or the higher base chart. We pushed up, we pulled back, we broke structure to the upside, and you got to ask yourself, is there an area of demand that was just created? Yes, aggressive buying here on the break of structure, pulls back right here. See that? Right here. So then I would mark this zone right here. What am I doing? Okay, zone right here. Sorry about that. Right here. And it's a high probability zone because we have an imbalance gap resting back inside the zone. See that? Higher time frame or higher base zone with the 60 range. Lower base entry chart, we got a demand zone here on the 12 range. Pulls back to it. Once we get the break and close of a candle above, right here at 49 3/4, you can go long. Now the thing we want to do is we look over at our at our higher base chart. Where can we aim from? Once we are into a position, and basically before you even do that, you want to size the market up to see if it does reject and we get that set up, which is part of the strategy on our lower time frame, meaning the break of structure to the upside, pull back to a key area demand, break and close of a candle above on the lower time frame chart I just showed you, the 12 range. Well, I'm looking back here at my higher time frame. There's an imbalance resting right here. And I'm going to aim for it to come all the way back up here to at least 575, 576. Once it rejected on the lower time frame right here, as you can see, we got the breaker structure, creation of a demand zone, 12 range high probability zone. We get the break and the close of a candle above. I'm going to aim for 75, and look what it does. It goes all the way up there. Now, I didn't get into the trade. I'm showing you an example because this was at around 4:45, 5 o'clock this morning. I wasn't up. I wasn't trading the London session. But if you did trade the London session, maybe you capitalize on that movement. But I'm trying to show you a consistent strategy that works time and time again if you look for setups and mark off high quality supply zones or demand zone. In this case here, I show you an example of a demand zone. Moving down, scaling down to a lower time frame once you mark the higher time frame zone. Sizing up to see are there any imbalances resting above on this movement here to where if the market comes back and taps into this higher time frame or higher base zone, that if I scale down and move down to my lower time frame chart and look for a setup, meaning the breaker structure, again, pull back to a key area demand, aggressive buying, demand on the pullback at a high probability zone on the 12 range, and then I look for the break and close. Where can I go to fill in the first area of imbalance back on the higher time frame? It's as simple as that. That's all it is. All right, so I'm going to show you also here, we're looking at the ES futures now. We're just looking at the NASDAQ 100. Supply zone setup, okay? We see that the market was making higher highs and higher lows, and then we started to break structure back to the downside. So we started moving lower breaking structure, so the sentiment kind of changes. Your bias should change and looking for short positions because we're taking out, structure back down to the downside as we're moving lower, making lower lows and lower highs, breaking structure back to the downside. And as we're doing so, we come back and make a low here. There is a high probability zone right here on the higher base chart 60 range. Okay, red zone, I marked it with. That means I'm looking to go short. It is a supply area. Okay, aggressive selling. The market comes back. We have an imbalance or gap back to the zone, right? So when it gets back there, I'm moving down. Now, in this case here, you could use the more confluence you have, because that's basically what we're doing. We're using multiple time frames, okay? And I don't really want to say time frame because I don't trade time-based charts, or multiple base charts, I should say, because I'm using, in this case here, you can use you can use the 60 range, 24, and 12. The more confluence you have across multiple charts, the better your trade is going to work out, I say. I'm not saying you can't just use two charts and the trade won't work out. I'm just saying that you should know as a trader, the more confluence you have, the higher the probability of a trade that's going to work out in your favor. So in this case here, we have a supply zone right here, pull back, red area there, that's off the higher base chart. Now I'm going to go down to my 24 because I'm going to show you how I included the 24R and scaled down to my 12R to get into an even better setup, okay? So moving down to my 12 range chart right here, blow this up. Come on, okay? So that's that red zone, that's the higher base 60 range supply zone. Now what I did was I waited for the market to pull back, looking at it on my 24, and said, okay, is there a high probability demand area coming off the 24 range? Got to break here, pull back, breaker structure lower, okay? Right here, aggressive selling. Is there any imbalance or gap back to the zone? Yep, right here, okay? Inside the zone. The market pulls back to it. So I draw the blue zone off the off the 24 range. So now we have confluence on both the 60 range, the 24 range, and now we're going to move down to the 12 range to see, can we get into a trade setup, okay, to where we can aim for lower areas off, and look at the higher time frame or higher base chart. Now we're on the higher base chart. Not the higher base, the lower base, my lowest base chart, my 12 range entry chart, the ones I like to execute my trades off of. Red zone, 60R, supply zone. The blue zone there, the 24R, supply zone, okay? Confluence and confirmation off two charts. The red zone, the green box you see there, now this is the 12 range supply zone resting right here inside the 60R, inside the 24R, and now we've marked off a 12 range zone. So once we tap into that, and I see that, okay, I'm gonna mark this area here, okay, supply, okay, high probability off the 12R. Now I have confluence with 3 charts across the boards, and that raises the probability for a higher chance and to look for a short entry. Now, once we tap into the 12R zone, all I'm looking for now is a break of a candle and close of it below the last bullish candle. See that last bullish candle right there? The next candle that closes, a bearish candle that closes to the downside, I'm going short. So you go short right there at 55.5. Off confluence using confirmation from 3 charts. It is simple as that. All right. Back on the higher base chart, we just classified and got into our trade. What we're going to aim for now. See the imbalances resting right here? See the imbalances resting right here? Back to this low. This is that pullback on all 3 charts. 60R, the 24R, and the 12R. When they all match up and we get a rejection off of a supply area, high probability zone on the 12 range entry chart, go short, and we're going to aim for back down here at 16. Simple as that. And you can pick up a lot of points just off that type of setup right there. I'm telling you, this is one of the best scalping trading strategies you're going to find. Practice it, back test it. You know, you're going to have to probably do away with some of your old ways and kind of just refresh. The biggest problem people have, traders have, is trying to merge one strategy with another strategy with another strategy. And then, you know, you start doing too much stuff and it's not going to work out. That's why I don't trade with a lot of indicators. The only really indicator I use is volume profile, because volume is, to me, just the most important thing in trading. It is the most important thing. Okay? But I just want to show you that, guys, today. If you don't believe me, you can come over to the Discord community and ask our fellow members there, hey, does the strategy work? You know, does anybody use it? They'll let you know. Okay? We have a great team of great community members that trade similar to the way I trade and have been passing these evaluations. Now, I don't trade prop firms, but they trade them and been doing fairly well. Lots of them are taking their own funds that they made from the prop firm, having a funded account or multiple funded accounts and setting it up into their own personal account. All right, and now they're trading both the personal funded accounts through these evaluation prop firm companies. So, look, I'm just telling you, people are becoming profitably consistent by, you know, using the same similar strategy. So, but that's all I have for you today, guys. If you're interested in becoming a Discord member, find the link down in the description portion of the video. If you're interested in becoming an elite channel supporter or elite channel member, click on the join button that you see right in front of you. Or you can scroll down right below the link in the description, right below the Discord link. You'll find a link that says become a member, $6.99. What you're doing is supporting me or the efforts as a content creator and providing you valuable content, but as well, what you receive back in return are my trade breakdowns, to where I go into detail as if you're sitting next to me, okay? And I talk about in depth the reason why I take trades, okay? Whether it's, you know, the setup in general, meaning what I was thinking of prior to taking it into the trade, and where my areas of profit are set at as well, okay? And I also talk about, if you trade with hard stops, where to place your stops at, you know? I always talk about supporting swings, you know? Those are good areas to place your stops at. Outside of that, you also will receive the video playlist. So I'm telling you, you get a lot of information or a lot of valuable content wrapped up all in one for $6.99 a month. Most people spend more than that on the price of a cup of coffee a day, or one of their favorite breakfast sandwiches or lunch sandwiches, or whatever the case is. $6.99, or you could go spend a couple $100 or a few $1,000s on someone's trading course. Not knocking anyone who has a course out there. I don't have a course because I don't have anything to really sell in the sense of a course. I'm not putting together anything like that. I'm not a mentor. I'm not an educator. I don't claim to be. I just create these videos to share with you my experience and how I trade. Okay, as simple as that. Again, if you don't believe if the strategy works or not, I'm not going to toot my horn. I'll allow you to come over to the Discord community and ask some of our fellow members that are part of the community. We are growing by the day, and on that channel or in that server. So, but you know, do me a favor right now. If you're not a current sub, go ahead and click on the subscribe button right now. Make sure to turn on all your post notifications. And last but not least, the most important thing, please drop a like on the video if you found value in the content. Take care, and I'll see you in the next one.